So many people were just on TV talking about Tesla. One Tesla stock analyst says Tesla stock is going down to 150. Another one says it's going to 300. Then former Tesla board member was on TV as well talking about Tesla's future and Tesla's recent earnings. And then Dan Ives was also on TV and he said something that totally stunned me. I was actually drinking my tea as I was listening to him and I almost spit it out. So let's dive into today's episode.
Tony Saganaki has an underperform 150 target. Also, Ben Callow, analyst with Baird, has an outperform with a $300 target. Tony, I thought about you last night because your skepticism has been well telegraphed. And even a long time ago, you told us that in the end, OEMs tend to get legacy multiples. Is that what's happening here?
Certainly, I think more investors are questioning whether Tesla is a technology company or a car company. This quarter revenues grew 3%. Margins are very similar to other car companies. And so I do think investors are increasingly questioning that. Now, the stock is still trading at 75 times our earnings projection. 150 times cash flow. So clearly investors aren't all the way there. And quite frankly, I don't expect them to go there. I do think Tesla has some unique technologies. I think they could play out and manifest themselves in higher margins longer term. But I think for now, investors are really questioning the kinds of multiples and the kinds of extrapolated growth rates that they had afforded Tesla in prior periods.
I have a question. Can you name any car company that said that the most important product it is working on is not at all anything related to a vehicle? Volkswagen, no. Toyota, definitely not. BMW, no. Mercedes, no. Tesla, Elon Musk said that the most important product that Tesla is working on, and he said this a while ago, is the Tesla bot. We can argue about how much impact the bot will actually have on Tesla's bottom line eventually, but anyone that is able and capable to use their own brain without falling into a coma instantly will realize that Tesla has some of the best engineers in the whole world. In fact, when you look at the US engineering students, they want to work for SpaceX and Tesla and a few other companies that obviously require extreme level of engineering capability. And then you got tech companies like Apple, Google, Microsoft, and only then you have some car companies. You know the saying, tell me the 5 people that you hang out with the most and I will tell you who you are? Well, I think to some degree the same can be applied to companies. Tell me what kind of employees hang out in your company and I will tell you what kind of a company you are. And clearly Tesla has many world-class engineers who are the best at what they do. So the only way I could say that Tesla is not a tech company at all and is just a car company is if I just listen to what other people are saying and I haven't done my research and I just went along with the traders. But you see, the money is not made being an investor by just doing what everyone else is doing. If you want to do that, just buy S&P 500 and hold it and you will pretty much beat every fund manager. But if you want to beat S&P 500 returns, then you have to bet against what is largely a consensus. And to some degree, the consensus is that Tesla is just a car company. It took Wall Street quite a bit of time to figure out that Tesla, yes, it will be profitable. Tesla had to release the Model Y for everyone to know, yeah, Tesla is actually going to make a lot of money. So the institutional investors, being ignorant and playing it safe, are presenting us with this huge buying opportunity. I had some time yesterday and I wanted to listen to the earnings call and really take some time to think it through. If you really listen to it, it's very clear that Tesla is working on the next generation platform and it's not just going to be the next model, the next car that no one really cares about. It will have revolutionary manufacturing technology which will be leaps and bounds ahead of everyone else. And the way Tesla is working on it is going to be very difficult to have competition come in and just copy what Tesla is doing. Because Tesla is also working on the machine that makes the machine, and that is what's going to be so challenging about copying Tesla going forward.
But do I hear a hint in there, Tony, that you won't necessarily wait for 150 to re-rate?
No. We've been pretty objective in how we set our price target. We've had our 150 price target for a couple of years now. It's based on running out our forecast to 2050. And if we have to change our forecast and the price changes, we will, and vice versa. I just think, look, if Tesla traded at, 10 times earnings, it would be a $30 stock, and we certainly don't think it's going there.
I think that was a direct dig at Gordon Johnson's $23 price target for Tesla stock.
You've been at $300 target, so are you feeling more skeptical now?
I think that, this year, I think it is actually a good setup for what they did last night. I'll turn it on its head. So, they talked about volumes not growing at that 50%, substantially lower, I think is kind of the terminology. The streets, somewhere below 20% growth rate, we're down at 16%. That gives them room to actually beat numbers this year. I do think, growth, for companies is not all linear. And this is a year, they call it a transition year until we get, the next Model 2 on the road there. At the same time, the energy business is humming. This is something that if we went back, 7 years ago, no one gave any credit to. It now has, good margin, arguably better margin going forward than the auto business and growing at a faster clip. And then, then you start getting into AI. Lots of skepticism around that. But that's good for the setup, to be contrarian around that. But, Tony has said in the past, how are you going to get to these volumes with just the models that are out there? And he was right about that. He asked that on the call, maybe a year ago. But I do think that, for patient investors, there's upside when we start getting to this next model, which will be, a mass market vehicle. And really what Tesla has been working towards, since it was founded.
I think that was a fairly accurate description of what is happening right now. I do think that there is going to be so much growth coming from the next generation vehicle, but should you sell Tesla stock before Tesla releases that next generation vehicle? That's a very dangerous strategy. Timing the market has been a recipe for disaster over and over and over and over again. 13 months ago, there were people that sold Tesla stock because they were convinced that Tesla would cut prices, and Tesla did cut prices, but the stock did not drop. It doubled in about a month. So you can have these weird things just happen. In other words, my personal conviction is, if you believe in a stock in the long term, it's really not worth it to try to play it in the short term. Just because you think, maybe you might make extra 20%, 30%, maybe even 50%, but then you are at risk of losing out on a doubling, tripling, quadrupling, or 5xing.
Yeah, although that's a long time between now and then. I mean, Musk on the call said, hey, I'm overly optimistic oftentimes, and he's still talking about the end of 25. So that's a long way between now and then. I mean, what happens to the stock price?
Well, between here and there, I do think a catalyst could be the compensation plan. Now, we're kind of in a limbo here. I was surprised that no one dug into it when a lot of the call was discussing AI, Optimus, Dojo, but we still haven't ironed out, where Elon is within all of that with the compensation plan. I do think once that gets settled, if it does have the different type of milestones that the past two compensation plans have had, that will be a major catalyst because it'll give investors and us something to track. And by the way, the last two compensation packages, no one thought they were going to hit all those targets. They hit them ahead of schedule. It just shows, how quickly they built the company and how quickly they've evolved.
I 100% agree with that. I think the compensation package is very important. With the compensation package out, it would be very clear that Elon is then focused on Tesla. And I think he would structure his days and his productivity to largely, if not mostly, benefit Tesla. It has always been a terrible idea to bet against any Elon Musk company, and I don't think anything will change in the next 10 to 20 years.
Let's bring in a former Tesla board member, Steve Wesley, to discuss. Steve, always good to have you. You've been positive, and rightly so, for quite some time on the company, on the stock to a certain extent, but I do wonder, after listening to yesterday's call, Obviously, the competition that has come to the fore, the price cuts, the lack of any real catalyst in 2024, seemingly, where you stand right now.
Well, look, let's give Tesla credit where credit's due. They've just posted not one, but 3 consecutive great years. They grew 71% in 2020. They grew 51% in 2021. The challenge is going to be 2024 because they're in between new product offerings. The Model 3, Model Y, phenomenal successes. Model Y today, the largest selling vehicle in the world, gas or electric, stunning. But what about 2024? What they really need to catch up growth-wise with the BYD that grew proportionally 70% last year, delivered 1.6 million vehicles to Tesla's 1.8. They're going to pass Tesla this year for sure. Tesla desperately needs to get that $25,000 model into market by late next year. So for this year, they've got 3 shots on goal here that they're telling analysts. The first is the $25,000 model, but how soon can you get that out? The second is they're clearly a leader in autonomous driving robo-taxis. I think that's at least 3 to 5 years out. The interesting play that few people talk about is the Tesla Energy division did $6 billion this year. It's growing at 54% a year. They're working on being essentially the world's largest utility. That's an interesting play. Those are numbers most auto companies would die for. But 2024 is going to be a tough year. Tesla's going to have to execute on everything they do, from opening the plant in Mexico to getting the plant in India built to selling some more Cybertruck. It's going to be an interesting battle, and the Chinese are coming.
Yeah, BYD is actually doing fairly well in terms of sales. Last year, it sold about 3 million vehicles. 1.6 of these were fully electric. And I do agree with Steve that BYD will surpass Tesla this year in battery electric sales. However, there is a huge difference between Tesla and BYD. First of all, Tesla has not exhausted all of the opportunities with increasing its inventory. BYD does have higher inventory, which certainly helps BYD sell some more vehicles. And also, BYD has so many models already. They cannot just keep making new models to increase their sales. They will largely rely on improving these models or just praying that the BEV market grows, which it will, and by default, therefore, making more sales. Tesla's strategy, though, will be to make the absolute best vehicles in each class and then completely annihilate each category with a new vehicle. Very different approaches, and if you can have higher volume, that actually is a better approach in the long term because you will have better economies of scale.
Musk has typically been optimistic when it comes to the timing of things, and sometimes wrong. Do you think they can get there in terms of that model you're talking about to make them competitive as soon as the end of next year?
I think they'll get initial sales out by then, but they need to do better. Here's the big picture most investors don't fully understand. We're living in an international world. Tesla dominates the US, 51% market share, more than everybody else combined. But we're now the second largest market in the world after China. China sold 8 million EVs last year. All of Europe together did about 2.6 to 3 million. US and Canada did 1.6 million. So where do you want to be number one? China. So US dominating, Tesla dominating in US, dominating, frankly, in Europe. But they've got to get out to that rest of the world because that is where the money's being made. But there's one other issue investors need to look at, and that is for the last 10 years when it comes to EVs, it's all been about range and price. Now it's moving over to being about tariffs and privacy. Because as you point out, will Tesla and will BYD come to the US? They're absolutely coming to the US. They're already selling buses here successfully. They've started selling in Europe. But consumers are increasingly going to ask the question, do I feel comfortable driving a car with a Chinese IoT device that knows where I'm going, maybe listening in on me? That's a big issue. And then the tariff issue is another big one. U.S. needs to be careful on tariffs because we may feel good with the 25% tariff we've slapped on, but there's a much bigger auto market in China than there is here. And if China reciprocates, we may think twice about that.
I think the privacy issue to some degree is valid, but also at the same time, many people just flat out don't care about privacy if they can get a cheaper product. Just look at Europe, for example. A Chinese company has 22% of the market share in Europe, smartphones. specifically. And people buy Chinese cars in Europe. And Huawei's market share was actually pretty high before the ban. People were buying the products left and right. I think, yeah, it will be on people's mind, oh, this is a Chinese vehicle, but I don't think it will stop them from buying the car if it's the right price and the vehicle is fairly decent.
Did you come back today to say I was wrong?
I mean, look, we thought about we were dead wrong in terms of the call into the quarter. I'd almost go and say almost 25 years doing it, probably a top 5 worst call that we've had going into a quarter. We thought, as we talked about, that they'd put the line in the sand for margins. Price cuts are mostly over, and instead, it was a circus show from a conference call. They left the door open for price cuts, didn't give guidance. Musk talked about the 25% in terms of the ownership and the AI, and it went off the rails. And that's why we're here today, basically, looking at it and thinking, like, okay, now what's the step forward? Put out that top 10 list, which we believe could be an inflection point to how we ultimately get higher.
Are you reassessing essentially now everything about this company going forward?
Look, we took it off top picks list because in the near term, from a catalyst perspective, no smoke and mirror. I mean, you don't have the catalyst where you could ultimately say, this is going to outperform in the next 30 days, 60 days.
While Dan Ives might be right about this, with Tesla, you just never quite know. Remember that sudden rally, and every single day, Tesla stock just going up and eventually going up as much as 59% roughly. Here we go, 59%. That was so sudden, and that was all because of Tesla making deals with other companies wanting to use Tesla's chargers. So imagine a scenario like this, which eventually it will probably happen, but is it going to be this year, next year, 5 years from now? Who knows? One day, eventually, full self-driving is going to get to a point where other companies will look at it and decide, Tesla got it figured out, and not really. We should just license this technology. And one company will do it, and then the next company will do it, and then everyone else will jump on board, and probably the stock will rally just like it did from May till the middle of July. Or Tesla releases some crazy video showing that the Optimus bot can actually be useful in the factory, or the interest rates suddenly coming down, making vehicles more affordable, therefore increasing the demand of Teslas? Or Wall Street finally figuring out that Tesla's energy business is actually going to be a fairly big deal eventually? Or Tesla suddenly having a dojo breakthrough and then everyone else jumping on board to buy more Tesla stock because Tesla would now crush it with dojo. So many things at any time can happen with Tesla that is just not worth it being out of the stock if you think it will do very well in the long term.
Now, in terms of the long-term thesis, look, we remain firmly bullish because it's my view, and it goes back to similar Netflix in 11 with the streaming, you go back to Jobs in 07 with iPhone. We've been through so many different evolutions of companies. I think view this more as an evolution into the next phase with AI, and I view the mass market vehicles sub $30,000. So we don't throw that out, but no doubt in the near term, I mean, it's been a disaster this week.
I look at you still haven't outperformed, right? So you haven't taken that. How do you fundamentally have an outperform at 1.2 trillion market cap and an outperform now that it's down to 581 billion?
Sure.
It's almost been cut in half. But how do you still have an outperform on it?
Yeah, it's a great question. It's my view that going forward, the margin story, it's going to trough. So I view like when they cut costs, you could actually start to get margin expansion 20, 30%. Then all of a sudden $5 of earnings becomes 8 to 10 when you look out the next 2 years, especially on AI. I mean, our view here is this could be the best long-term AI play out there. And that's what we talk about. I think it's ultimately going to form into some sort of holding structure from an AI perspective with Optimus, Dojo, and others that must
the best AI play out there. What are you talking about in terms of automakers? Are you talking in total, like against Microsoft?
So I'm saying longer term, from an automotive and from where they could go with Dojo and Optimus, you could argue that longer term, this is going to turn to much more of a broader company. Now, as we've talked about, the AI revolution is led by the godfather of AI, Jensen, NVIDIA, Microsoft, everything we're seeing in tech. But for Tesla to misevaluate that this will be an AI story, this will be what I view as almost, I'll call it an air pocket, and it's more than an air pocket, but I think we are going to see at one point 2.5, 3 million vehicles per year. And at that point, Scott, we look back at this is more the opportunity of very bad bump in the road rather than the time that this is a structural, what I'd say change in the story.
I was enjoying my cup of tea as I was watching Dan Ives there. And when he said 2.5 to 3 million per year, I almost spit out my tea because he was talking about long term. So I thought he would say 2.5 million, 3 million vehicles per quarter. If you're talking long term, I mean, 2.5 million, 3 million vehicles, that's not a long time from where we are right now. So then I've stunned me there for a little bit. Certainly, after Tesla releases the next generation vehicle, Tesla will exceed 3 million vehicles per year produced easily. There are a lot of bears out there talking about Tesla stock, and I think some of them are actually factually not wrong. Just like this clip that I'm going to demonstrate to you from the new channel that I'm working on, Wow with Matt.
Shocking scenes tonight as a gunshot was fired in a stadium and a group of men fled from the scene. I think we can see footage now. Thank God he missed.
Factually, there was nothing wrong that was said. All the facts were right. But obviously, the interpretation of that story was completely wrong. And that's exactly what's happening with many Tesla bears right now. They're getting the facts right, but they are misinterpreting so many things. Going forward, I will be sharing products that I'm already using or that I'm about to try and experiment with, or just products that I think would be helpful to all of you guys, even though it may have nothing to do with Tesla. A few years ago, I spent one whole year pretty much just looking at every single biohacking thing that's available, and most of these things, honestly, were a complete waste of time. But some were actually worth the money and the time. So here's one of the things that my family wants to experiment with, and it seems like this one is seriously going to work. If you're looking for a Valentine's present for your wife, or your mom, or your daughter, you might steal my idea. I'm gonna buy this mask as a present. Basically, it's an LED mask. It's clinically proven to reduce wrinkles as well as breakouts. The way it works is you put it on for 3 minutes. Red light reduces wrinkles and blue light reduces breakouts substantially. I actually spent a few hours researching this and it's clinically proven. I thought this was all a sham, but no, there are actual clinical studies that have proven that red light and blue light work. And because I only buy good presents, I looked at all of the other LED masks and this one seems to be by far the best one. It is the most comfortable one. It is battery powered, which means there are no wires. You can just put it on and do all other stuff. And doctors recommend it because red light and blue light therapies have been proven to work. And if you have anyone in your family, especially a teenager suffering from breakouts, this might really help. And if you want to support this channel, you may click on my link down below and purchase the mask right now.